tariffs, for example, the extension of the corporate tax cuts, the push for more tax cuts, and the push for lower regulations, those are all very much in play. Those are all seen as being business friendly. There's a perception, perhaps, that a lot of, the businesses that are being surveyed in business sentiment surveys tend to, as it were, attack Republican. It's not that they're all Republicans, but for them, a pro-business Republican administration, with or without Donald Trump at the head of it, sounds like something that they can appreciate. So that's all working in favour of US stocks. There's also the feeling that, we remember from last time round that Donald Trump very much saw the stock market as a barometer of his presidency. So there's perhaps some complacency built in there, but perhaps it's fair enough that if what he is doing starts to bring the stock market down, he will change course. And we know he's always capable of changing course. So all of that is looking like a reason for US equities to keep going. And sure, they remain overvalued on standard metrics, but they've been overvalued on standard metrics for quite some time. And with some rough patches here and there, the uptrend has been pretty strong. Most people expect that to stay in place for some time to come.
Garfield, is the strength of the U.S. economy also a key reason why we continue to see yen weakness? Because even today, very counterintuitive, but expectations are of a rate hike, but the fact that we could even see weaker yen going from here.
Yes, Sherry, that's the strength of the US economy, and therefore the still wide yield premium that US assets have. That's an obvious reason. There is also, as I said, some of the tariff concerns have taken a step back, but they're still lingering there, and Japan, as a very trade-exposed economy, that's seen as a potential drag for it. I think more importantly, this is really what the BOJ kind of wants to achieve. We had some talk earlier about the idea that last time they hiked, which came along with when Japan decided that it needed to intervene to stop the yen from going much further. All of that led to a very rapid yen gain that caused a carry trade unwind that did lots of damage to shares in Japan and beyond. So with that somewhat scarring experience behind them, it looks very much like the BOJ wants to be carrying out a dovish hike. It sort of can't not hike after it's made it so clear it's going to, and given those depreciation pressures that are still there for the yen, if it doesn't hike, you could see the yen go past 160 in the flash of an eye. But they also don't want to see the yen turn around and gain strongly. And I would argue that a BOJ meeting where they hike, but the yen declines about 1% or so at most, that's probably pretty much ideal, because the expectation would be that then, as the fact that they have actually hiked seeps through, if the data continue to move in the right direction for them, then the yen will stabilize and start to get a bit stronger, but they don't want to see it really motor. And that's what they had in July, and we saw what happened then. Plus, Governor Ueda is obviously by nature a very gradualist governor.
Yeah, I do wonder how they're really considering the political ramifications, of course, of a too-weak yen at this point, right? Godfrey Reynolds, who leads our Markets Live Asia coverage, of course, with a look ahead to the BOJ policy decision and the market implications. We'll get more analysis on all of this from State Street Global Advisors as well, not to mention Goldman Sachs a little later as we look ahead to the BOJ's decision in the coming hours. More ahead on the Asia trade. This is Bloomberg.
case you missed it from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Take a look at how Japanese assets are setting up for the open. The Nikkei, of course, gained for 4 consecutive sessions now. 5th consecutive session today, up higher with the Japanese yen holding at that 156 level against the U.S. dollar. The expectation today, of course, is for that rate hike to come finally for the first time since July from the Bank of Japan. Joining us now is Masahiko Liu, senior fixed income strategist at State Street Global Advisors. Masahiko, great to have you with us. So is the landscape now finally set for the BOJ to be able to make a move?
Sure. I think, it has been pretty sanguine in terms of Japan. For BOJ, they are way behind the curve, I think, right? And then the landscape was set since last year, right? The first rate hike was in July. I think if everything were okay, they wanted to go in December too. But back then, everything is very political in Japan, right? They didn't have the political cover yet, and there was not a very functional, established channel of communication with the PM office, the Ishiba administration. When they came in office in October, 2 months into the role, and in January we had a political cover from the Ishiba administration. I think that's why BOJ decided to go at this.
Yeah, politicians will be hard pressed to not see a 2-week yen, given how households are feeling the pain, right? Mm-hmm. But at the same time, will we see a rate hike and then see more yen weakness, given the strength of the U.S. and everything that's happening globally?
There might be a potential, scenario that you painted out, but I think, I think 160 was probably the center line that they have drawn in Japan, right? So it's pretty obvious when it gets to 160, even Mr. Akazawa, which is the economic minister of Japan, right? He's a close hit of Ishiba prime minister. He has came out and voiced some of that, making some noise regarding that too, right? I think on his back of the Ishiba administration, they are worried of excessive weakness in yen. That's why we have this political cover for BOJ to go hike at this meeting.
Masahiko, we've seen a little bit of volatility in current currency markets. How important is carry when you're looking at opportunities in fixed income? Well, how important is carry when you're looking for opportunities?
I think carry is very, very important, right? I mean, like, US dollar being the strongest currency now is because of carry and also, risk of asset, right? Japanese yen used to be a safe haven, but with everything out-yielding Japanese dollar, right? Yen, sorry. That's why yen has been so excessively cheap. But going forward, I think, versus dollar, it's going to probably stay between 150, 160 range, but right, especially cross yen, when there's diminishing carry into a cutting cycle of other major central banks like pound. I would say pound, Swiss franc is one of them, and also euro. I think yen has potential to appreciate and being the safe haven, re-establish itself as the safe haven currency, just asset, just behind US dollar and gold.
Do you see some risks in Japan from of its popularity?
I think there's always risk, right? And, he has lost the simple majority. LDP has lost the simple majority back in October. Volatility in terms of politics in Japan into the next upper house election in July. We might see a bit of volatility in that terms as, Shiba-san, his approval rating is not as high, and also, the potential failure of his administration to actually address the discontent. The next couple months, because if anything, if they were to change the top person to represent LDP, it will be the next several months before the upper house election.
More broadly, when it comes to Asian fixed income, what are you seeing in terms of opportunities? Because even yesterday, we heard more measures coming from China in order to support the markets.
Things in China, I think, drawing from a Japanese experience, JGB experience, I think China. The starting yield is very low, but sure, Japan. Hedging back to US dollar makes sense for investors in terms when you look at the long-term risk-adjusted return. Volatility is going to be a lot lower versus US Treasuries or its peer, and it's pretty attractive as an asset. But in general, as outside of China's Asian fixed income, high beta fixed income, we think that with US growth being very strong, US exceptionally translate into a higher real yield and higher US dollar, stronger US dollar, is generally not a
With us on BOJ, they senior fixed income strategist at State Street Global Advisors. You can also turn to your Bloomberg for more on this. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. We will bring you BOJ Day live. And right now, we're also following the market moves with broader global market meltdown that we saw here in Japan as well. And this on news coming from your merger, we're seeing some broad downside pressure across automakers. This is Bloomberg.
p.m. Eastern, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just AI. There's music in the markets, and if you want to learn to listen for it, we'll
ETFs like no one else. ETF IQ. Mondays on Bloomberg.
I'm also frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it.
Oil prices. And oil prices did fall after President Trump told the World Economic Forum that he would push Saudi Arabia and OPEC for cheaper crude. Let's bring in our senior energy reporter now, Stephen Stapczynski. Stephen, OPEC Plus has got its reasons for controlling supply. It's interested in supporting prices. How likely are they to listen to this type of rhetoric?
Comes to the geopolitics of Trump, it's quite unpredictable. You know, I think if you looked at everything and change because of a request from Trump would be surprising, I think, to the market. Now that being said, he's been able to pull this off in the past, and his first term, he was able to come and make an agreement between Russia and OPEC to cut production to help boost prices when things were quite low in 2020 in the middle of COVID. Now, coming again, while they won't clearly admit it, it is much better for Brent to be around the 80. Thing, and that's inflation, and that's gasoline prices. And if the consumer is seeing higher prices at the pump, then that's something that Trump is going to push for. So we'll see what happens going forward.
You're given, of course, a geopolitical landscape as well.
You know, I think another thing to look at is also natural gas. Trump is also pushing countries and regions. I mean, he's pushing the European Union to buy more natural gas from the United States, or else he threatened tariffs. So I think natural gas and
is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top story.
Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer context changes everything.
We're getting the latest Jibun Bank Japan PMI numbers for manufacturing coming in at 48.8. And remember, this has been in contraction territory since July. So we're back above that threshold of 15 expansion territory and improving. The first time in 16 months as we head towards a Bank of Japan policy decision. Today, let's bring in Tomohiro Ota, senior Japan economist at Goldman Sachs, who expects a 25 basis point rate hike. Great to
Two important messages in the last couple of months. The one is that they want to see the momentum for the Shunto wage hike. The Shunto is the most important leading indicator for 2025 wage growth. And the second thing is they want to see the better visibility of the U.S. economic policies. And so getting shaped to some extent.
Yeah.
So that both of these that cements the way toward the 25.
We have seen a little bit of stabilization and record highs again when it comes to stock markets. Although the inflation
that we expected the one-notch upgrade for the new core CPI, which excludes the fresh food and energy, mainly because of the rising inflation. And maybe a tip of some yen depreciation has a positive contributor, is a positive contributor. So that's something we expect to see.
To be dependent on what happens with the picture around the US and trade and tariffs.
The two rate hikes a year, so in January and July. So, but of course, it depends on In 2002, more than 20 years ago, President Bush imposed a tariff on our steel products and by roughly 30%, and then it was immediately followed by the 40% loss of our steel export to the United States. So such kind of targeted tariff is a kind of big risk for the decent kind of rate hike path going forward.
Are you able to say with any confidence whether
So we see those ceiling is a bit higher than the market consensus because we expect that the terminal rate was sustainable inflation, and of course the wage growth will go in tandem. So that's why we do not expect that 0.55% is a red line for the BOJ, and we expect that after maybe at the press conference or possibly from the state policy
of how fast those rate hikes will go.
So yeah, basically, I do not think that they hope to see is that some statement that's saying that the BOJ will only in those countries. But in Japan, this is not the monetary tightening. What we are experiencing is a structural change of the Japanese economy, which has been trapped under deflation for 2 decades, to the more normal economy inflation.
Which is, of course, helped by the fact that a cheaper yen does make inflationary much weaker yen and a much stronger yen.
Basically, we still expect that the risk is steady depreciation. Going forward. So
you don't expect a sort of red line, especially coming from political pressure.
So that's why we don't really say that. We cannot say that the 160 or something is a real red line, but at least we can say that if the yen depreciate further and at a very fast pace, which provides some additional kind of push for the BOJ to raise the policy rate early.
The health of the Japanese economy.
Basically, that compared with the 10, 20 years ago, cars and other export products at a cheaper price to the United States and other countries, and that's a good thing. But is not necessarily a good thing, especially for Japanese consumers, and that, of course, what the BOJ is thinking about. So, in that sense, a bit negative, especially from the quality and the cost of living perspective. But if it stays around a few percent depreciation,
Ahead on Bloomberg, we'll continue our coverage of BOJ Decision Day with analysis from JP Morgan. Nico